Hello everyone, Cory Mitchell here with TradeThatSwing.com, and I wanted to look at what is going on with gold and also the gold miners ETF. So what we typically find is that during the big gold rallies, GDX, the gold miners, either confirms or sometimes even leads the price of gold. It shows really widespread interest in the space because gold and the gold stocks are moving up. In this rally we have going on right now, gold hitting all-time highs, shown here on the Spider Gold Trust ETF, moving above these 2020 levels. And we can see GDX way below, about 33% if I recall, below those levels right now, 33, while gold is above. And historically, when this situation has happened, it has not boded well for gold because we don't have that confirmation from basically the gold mining stocks. The gold miners are more speculative. They move 2 to 5 times as much as gold. We can see here when gold rallied, you'll notice they both bottomed at the same time here. This is a weekly chart, but Monday, March 16th, 2020, and Monday, March 16th, 2020. So they bottomed at the same time. They started going up at the same time, and gold up just approximately about 43%, and the ultimate rally in GDX, 183%. So more than 4 times as much. And because they move so much, they end up being more sensitive to the sentiment of the market. So we often get these things or situations where GDX just confirms or will even lead the price of gold. So we had an example back here in 2020 where gold was trying to bottom, and it didn't ultimately bottom until the week of October 31st, 2022. If we go over here, October 31st, 2022, GDX had already bottomed and made a higher swing low there. And so you have this divergence where GDX was already moving up and GLD had been moving lower over basically this time frame that we had marked. And we also had some other instances, GDX, a bit of a foreshadowing again, when gold almost reached its prior high in March of 2022, almost got to that prior high, GDX a long way away. And just another one of those situations where it was like the gold stocks, they moved up, they moved aggressively, but not quite to that same level that gold did. And what you'd actually want to see is that the gold stocks are even moving more than gold. So this is a bit of a precarious situation. If we look just at history, and I would recommend that you go through your charts, just don't take my word for it, but if you go through your charts, you'll typically find that GDX, at least how I see it, when gold has these really strong rallies, GDX either confirms it or even leads it. And we are seeing GDX move up even a little quicker or start to bottom ahead of gold. And we're just not seeing that this time. So historically, this has not boded well for gold, and it just says, hey, be a little cautious. It also works, sometimes we see this situation where it bottoms a little bit before gold. We can also see it in topping, just, a really big example here back in 2010. This was another really big high. And we see this last big push in gold in 2011 and makes a run to a new high. But GDX was already foreshadowing that potential tougher times could be ahead because the price could barely make progress above the late 2010 high. So that would have been back here. Gold does keep running. GDX starts pushing up, and but it just can't really clear those highs. It does ultimately make it a new high with gold, but it was basically foreshadowing that, you know, this run could be near an end, and ultimately gold and the gold miners ended up heading lower after that. So these divergences, you know, this can take some time. These are weekly charts. You know, this topping basically took course over almost a year while gold still pushed up. So the timing's not always impeccable, but you do want both of these moving together, and if they are not, it does signal to be hesitant. So there is the possibility that GDX could catch up. Maybe we're just in one of those situations where it's just taking a little bit longer for it to move, but the fact that it's so weak right now does not, at least historically, and this is not a prediction about what's going to happen. It's just looking at how these prices have acted in relation to each other in the past. And right now, historically, this has not been a good situation for gold. What I don't know is how long this gold rally will last without GDX. You know, it could continue and it might be a bit of a historical anomaly. But at the same time, if history kind of plays out like it has in the past, when GDX hasn't really confirmed with the same ferocity that how gold is moving, typically it's won out and gold has ended up turning weaker. So just something to keep in mind.